So actually, let's talk about the euro yen. I'm expanding a 15-minute chart without indicators for the euro yen. Talked about a trade during during my coaching session between 6 and 9 a.m. New York time today. Yeah, I was talking about in the live class a zone between about 104.60 and 104.70. And again, this is a 5-minute chart without indicators. I like shorter-term charts like this to better identify intraday levels of support and resistance. And what struck me about 104.70, and I'll have a line here. You can I'm going to add some arrows so you can probably see some price action earlier, where this pair seemed to find a ceiling during London session trading around 104.70. And now I debated I'm trying to remember why I defined 104.60 as the other reason for the 10 pip zone. But I know I identified 104.60. Might have been because it was a fib. I presume that's part of the story. 104.60 happened to be the 50% fib of the move up from today's low to the swing high at about 105.05. Yeah, I guess that's probably the reason. So I would call that's the reason why I did it. So what we talked about during my London lunch coaching session today, between about 6 and 8 a.m. New York time, was along in that somewhere in that 10 pip zone between the 104.60 and 104.70. And the whole idea behind long, not only on this pair, but if there was for anyone who took a long on the Euro USD currency pair, the idea was this. I mean, as many of you already know, that the euro has been under pressure against multiple major currencies, with some exception the Euro Swissy. But certainly Euro USD, Euro Yen, basically under some pressure more days than not since this current month started. So the idea was that any long you would take on a day like this on this pair would be considered a counter trend long. A shorter term trade, maybe a scalp, maybe a spot type trade that you would hold at most over the duration of a session, probably nothing more. And always being cognizant that there could be levels or sources of prospective resistance where sellers could be lurking. And as you can see happen here today, we got a little bit of a rise in the euro yen. Euro yen rose from the 104.60 area to as high as 105.60. So you get a 100 pip rally out of that. But then once you get soon after the U.S. equity market open, U.S. stocks open with a negative tone. And a negative tone in the U.S. stocks wasn't surprising given the negative tone seen in European equities much of the trading day. And so the rally was rather brief in the euro against the yen, and was pretty much same you said for the euro against the dollar. There was a buying opportunity around the U.S. equity market open on the Euro USD. Let me take you to that chart. It was right in here around 1.3620. I've got a 15-minute chart without indicators expanded here, and I've got a horizontal gray line at 1.3620, particularly because of today's early Asian session highs, which I am trying to highlight with red arrows on the left-hand side of this chart. So you had that. You had some hesitation there. And what was it? London session trading there. And let me make this trend line a different color so I can highlight this. And you had a blue trend line there. Blue trend line defined by today's low and a higher low formed during London session trading. And that bounce, my cursor right now is situated next to the wick, the bottom wick of a 15-minute candle. That wick was formed not long after the U.S. equity market opened. As I've said many times before in our live class at FxBootcamp, I mentioned it several times in New York session video reviews, and some of you may have recognized it on your own. We've seen plenty of New York morning sessions when volatility increases in the currency market, starting either minutes before or minutes after the U.S. equity market opened. And that rally in the Euro USD, similar to the rally in the Euro Yen I just discussed a little bit ago, it did produce some profitable pips per se, but it didn't stick. It didn't stick. I'll show you why it didn't stick on the Euro USD, and I'll use that as a segue to discuss a trade on the pound dollar as well. So again, long around 36.20 area for a couple of technical reasons at least. And this pair topped out at about 36.90, let's call it 36.90-ish. 1.3690. So there's a 70 pip move. And you had every reason if you took that long to at least scale at about 1.3690. Scale meaning you close a part of the position, maybe half the position, and let the rest run if you chose to do so. Let the rest run at either a break even or you lock in, say, 15 or 20 pips of profit and let that part run. And whenever you get knocked out is whenever you get knocked out. So going from there, was there a technical reason why the euro flipped just below 1.37? Well, one reason is it's a psychological level, and when I think of a psychological level like 1.37, I think more like a zone rather than a level per se. We've seen plenty of times in the past, going back, we're talking years, going back over years, where the Euro USD, as an example, can turn, in this case, from up to down near a psychological level. It doesn't have to reach a psychological level to find resistance, or it doesn't have to, in the case of a dropping market, it doesn't have to reach a psychological level per se to find support. These psychological areas are more like just that, areas or zones. You can see in the case of rising market, price reaches like 90, the 90 price level, just below a psychological level, nice round number, and then can turn. Or vice versa, dropping market, price reaches say, let's say if we were above 1.37 and dropping, and we reached say 1.3710, 1.3705, seen plenty of occasions where the euro has flipped from down to up, just above a psychological level. So that was part of the reason I would guess that we had a flip there. More of the explanation could be found, or more justified reasons, I should say, could be found on the charts with indicators. Let me take you to those. And by the way, I talked about this. It wasn't just me, but the other coaches even talked about this before it came together. During my coaching session, I was talking about let me expand this hourly chart because this is really the main point in terms of the reason why, the technical reasons why it flipped. I was talking during my coaching session about the combination of the upper Bollinger Band on the hourly chart. You should see my cursor tracking a downward sloping gray line. That's the upper Bollinger Band. Sort of like an envelope for price action. And when you have a situation like this, where price has been rising much of the European trading day, and the Bollinger Band had been falling, when the two meet, when price and Bollinger Band meet, not always, but often enough, the Bollinger Band will at least temporarily win that battle. Unless, of course, it's a news-driven move, in which case, all bets are off, and even a Bollinger Band like that can turn from down to up and make way for price to move. But especially on a day like this, when it's a Monday, no major news flow, nothing new as far as I've seen really, significantly from Europe, no major U.S. news and such. On days like this, especially on a day being a Monday that's historically known for being the lowest volatility day of the trading week. For those of you who don't know, if you look at volatility by day of week, especially on the Euro USD, Mondays tend to be the lowest volatility day. In other words, the Euro USD, the range on the Euro USD on a Monday from high to low, and then on average on a Monday tends to be lower than the average range for other days in the week. The biggest days usually are like either Thursday or Friday. So Monday is known to be a relatively low volatility day of the week. Now, it doesn't mean you shouldn't trade on Monday, although I know some traders who choose not to trade on Monday. It's just that unless there's news driving the market, the obvious news driving the market, it's safer to be to scale back your expectations about how much a move can sustain itself on a Monday. Anyway, so you have the upper Bollinger Band come into play there as a prospective, at least temporary source of resistance. Also, note the thick black horizontal line there. This charting is, I should expand this a little bit so you can see the other pivot points. I've expanded this chart to show most of the daily pivot points. That horizontal black line that my cursor's next to now, that's the daily central pivot point. Again, daily central pivot point. So you had a combination of upper Bollinger Band, daily central pivot point, and close to a psychological level in the context of what's been, again, much of this month, a downward trending market. So no surprise, at least a few bears showed up around that combination, again, psychological area, central pivot point, upper Bollinger Band. So the sort of savvy technical traders, scalper / spotter could have been, long earlier at the 3620 area that I mentioned earlier, and then short at the daily central pivot. And both traders made about the same amount of pips.